How do the rich avoid taxes? Are you grinding 20 extra hours a week just to cover rent while 15% of your paycheck vanishes into taxes? Meanwhile, billionaires owning mega-yachts are paying a tax rate of 0. No, they're not breaking the law. They're just using a secret map that the school system never showed you. In the next 10 minutes, I'm going to expose the 3 most sophisticated tax strategies the American elite use to protect every single penny. Even better, I'll show you a loophole in the tax code that a student buried in debt can use to start building an empire. Do not look away, because this final play will completely change how you see money. Imagine you have $1 million in a brokerage account. If you sell it to buy a Lambo, the Internal Revenue Service will be right there to snatch 20% in capital gains. But the giants in Silicon Valley do not sell. They take that $1 million to the bank and say, "Let me borrow $500,000 using these shares as collateral." The bank agrees with a dirt-cheap interest rate. The result? They have $500,000 in cash to spend on whatever they want, while on paper their income is $0. Because a loan is not income, it is completely tax-free. That's how they dodge taxes right in front of your face while staying perfectly legal. But wait, there's a deadly flaw in this plan that most finance YouTubers will not tell you. If you just borrow money to blow it on lifestyle, the interest will eventually eat your entire fortune. Debt is a double-edged sword. So why can guys like Jeff Bezos or Elon Musk borrow billions year after year without going broke from interest? The answer is not in the amount they borrow, but in a concept called financial arbitrage. It's a technique that turns debt into an automatic money machine. If you do not understand this, copying the rich by borrowing money will be a death sentence for your bank account. The rich do not borrow money to buy things that lose value. They borrow at a 3% interest rate but dump that cash into assets that return 10% or more. They use debt to buy more assets, which generate cash to pay off the old interest and leave a massive profit. In other words, they use the bank's money to get rich without spending a dime of their own capital. Debt is no longer a burden, it's leverage. And here's the final blow that makes the buy, borrow, die strategy immortal. When they use debt as leverage to grow an asset from $1 million to $10 million, they just borrow more against the new value to pay off the old debt. This loop continues until the day they die. At that point, the entire debt is wiped out thanks to a rule called step up in basis. Their children inherit the $10 million estate with a tax bill of 0. The old debt is settled with the appreciated assets, and the cycle starts all over again for a new generation. The rich do not just avoid taxes, they designed a system where taxes are only for people who don't know how to use debt. Most people think of remote islands and mysterious banks when they hear about tax havens. But the truth is, the biggest tax haven in the world is not the Caymans or Panama. It's right here in Delaware and Wyoming. In these states, there are more registered companies than actual people. Why? Because here, you can set up an anonymous limited liability company. This is a shell company where even the government struggles to see who the real owner is. This is not just for hiding money, it's where the wealthy turn their most expensive personal bills into 100% tax-deductible business expenses. But hold on a second, if this is so easy, why is everyone not doing it? Why are you still paying personal income tax when you could just start a company and write off your iPhone or your summer vacation as an office expense? The IRS built a firewall to keep the middle class away from this cake. It's called piercing the corporate veil. If you do it wrong, your entire tax structure collapses and you face prison time for tax fraud instead of profit. So where is the thin line between optimization and crime that billionaires cross so safely? The secret is how they substantiate business purpose. The rich do not just buy a luxury car, they register it under the company and use it to meet partners or promote a brand. They don't just go on vacation, they hold a board of directors meeting at that exact destination. The key is having a professional paper trail proving every expense serves the goal of making a profit. When you have a system to turn your daily life into a series of economic activities, the taxman has no reason to reject those deductions. By placing a company in Wyoming and spending through that entity, the wealthy have made income tax obsolete. They own nothing, but they control everything. The house they live in, the car they drive, even the dinner they eat are all paid for with pre-tax business dollars. While you pay taxes first and spend what's left over, they spend everything first and only pay tax on whatever tiny profit remains. That's why a student grinding for a job will always be poorer than someone running a shell company in Delaware. But how do you turn these empty shells into real money machines? That brings us to strategy number 3, asset depreciation. You buy a new iPhone, and the second you walk out of the store, it loses $200 in value. That's a loss. But for the rich, every time their assets get older, it's a win. This is the depreciation effect. Look at the skyscrapers in New York. Over time, their real value skyrockets, but on the tax returns sent to the government, the rich claim the building is falling apart and losing value every year. They use the laws of physics to subtract millions of dollars from their taxable income. The result? They collect millions in rent every month, but tell the government they are actually losing money. Cash flows in, but taxes stay at zero. But here's what 99% of finance students miss. If normal depreciation takes 27 years to recover your costs, how do the young millionaires buy supercars and mansions immediately? How do they cram 20 years of loss into a single tax year to wipe out their tax bill today? There's a technique called cost segregation. Think of it as a time machine for taxes. But be careful, if you use it at the wrong time, you hit the recapture trap, where the government claws back that money with brutal interest when you sell. So how do they take the fast depreciation and never pay back a cent? The secret is breaking down the asset. Instead of seeing a building as one block, they separate the electrical systems, the carpets, and the landscaping. The tax code allows these items to depreciate incredibly fast, in just 5 to 7 years. And to avoid the recapture trap, they use the ultimate power move called a 1031 exchange. Instead of selling and paying tax, they swap the property for a bigger one. They keep leveling up and deferring taxes forever. They never sell, they only upgrade. The loop is complete. They use bank money to buy assets, hide them in anonymous companies, and use the aging of those assets to kill their tax bill. When you see a billionaire buy a $50 million private jet, don't think they are being reckless. They are performing a financial transaction to wipe out the tax bill for their entire income that year. The poor work for money, while the rich make old things work to generate cash. But all of this is nothing compared to the final play, the secret that allows the wealthiest families in America to stay rich for centuries without working. All the strategies I just mentioned, from debt to depreciation, are just ways to delay taxes. In finance, they say you can run from anything except death and taxes. But the 0.1% found a way to beat both. Let's do the math. Your father bought Apple stock in 1980 for $1. Now it's worth $200. If he sells it to retire, the taxman takes a massive cut. But if he holds it until he passes away and leaves it to you, a legal miracle happens called a step-up in basis. The value of your asset is reset to the current market price. Those $199 in profit from the last 40 years? Gone. The taxes on that money? Zero.
You get the full $200 and can sell it instantly without paying a dime in tax. This is not just inheritance, it's the most legal way in history to wash away financial obligations. But there's a reason why 90% of wealthy families lose it all by the third generation. Why, despite this perfect reset button, are young people in America still drowning in debt? It's because they lack the structure I call the perpetual machine. Most people sell their inheritance to spend it, and that's when they fall back into the income trap. So what did families like the Rockefellers or Kennedys do to keep their wealth from resetting to zero? The answer is combining everything we've discussed. They never sell, they use debt as leverage, they use depreciation to fuel the machine, and finally, they pass it on. They don't teach their kids how to make